All right. Hi, everyone, and welcome to our second Defunding Climate Disaster Committee presentation of 2023. This is a new webinar series that we're doing as part of 350 Colorado's Defunding Climate Disaster Committee. So each month we're going to have a different presentation on a different divestment related topic. Some of you might remember last month's Corporate Knights report on Para and how much money they're losing by investing in fossil fuels. And this month, we're very excited to be joined by Michael Richardson of Rivers and Mountains Green Faith. And this is going to be an interactive presentation on how you can personally remove your funds from the Wall Street banks that are financing the climate crisis and put your money into more sustainable institutions that will use your money for the common good and not all the things that we are trying to stop from happening. To start us off, I'm very excited to introduce Michael Richardson of Rivers and Mountains Green Faith, engaged in climate action in coalition with Stop the Money Pipeline, Third Act, and Green Faith International, New York Renews, and the Mid and Upper Hudson Valley of New York State. Michael is a lifelong activist from war resistance and social justice movements beginning in the early 1970s to today as a planner and organizer of climate and environmental actions. Michael is also an advocate for regenerative agriculture. In 2012, he co-founded and directed an agroecology training and demonstration center in Nicaragua for small-scale growers. From a varied cache of experiences, including organic farmer, solar installer, labor economist, county legislator, and Buddhist practitioner, Michael is committed to bringing attention to the moral imperative to stop funding climate chaos. And without further ado, I will turn it over to Michael.
Thank you, Giselle. Sometimes I just like to say, hello, I'm Michael Richardson, and I rob banks. We're going to cover some material rather quickly here this evening, and most of it is going to be on a share screen. And I'd like to get into it right away. So let me show you what we have here for your use. This workshop is actually a 90-minute workshop. So everybody can see the screen, is that right? So this is a 90-minute workshop that we're going to condense down into just 2 of the 4 parts. And it'll take us about 30 minutes to get through it, 25, 30 minutes, and then there'll be some question and answer. The website is built so that you can access this at home when you have time or a question on your mind. So you simply go to the website, which I put into the chat, which is rivers-mountains-greenfaith.org. And you'll see this beautiful picture of the Hudson River and the Catskills in the background. Hence, we have the rivers and the mountains. And please take some time to look around. I think you also are going to be involved in the Third Act on March 21st of 23. We're leading the demonstration in Albany, New York, and we have this wonderful host of sponsors here, including, as you see, some 350 orgs. Also, Giselle and I were talking just a little bit earlier, we are also part of the Red Rebel Brigade, and so we turn out the Red Rebels to quite a few of our demonstrations, so take a look at that. But we want to focus on this button right here. So you go to the home page and you push on individual divestment. This will bring you to this landing page that has our calendar of workshops, and of course down here we see where we have the 350 Colorado. So here on this homepage, you click on Go to Workshop. Now, let's take a moment here and pause. This is Align Your Money with Your Values. It is a workshop for individuals and organizations on how to move their finances from fossil fuel extraction, production, and distribution. Now, with all that said, I don't know about you, but I don't remember ever putting my money mindfully into fossil fuels. So when we started putting this workshop together and it was about how to move my finances from these things, I said, wait a minute, I don't remember doing this. And it's like, if Mr. Peabody, who owns Mr. Peabody's coal company, had come to me one day and said, Michael, I got this mountain in Pennsylvania that I want to take the top off of to get to some coal. Loan me some money. I would have said to Mr. Peabody, no. I just don't think that aligns with my values. I don't want to do that. Well, imagine this. Mr. Peabody would just go down the street to my bank, walk into the bank and say, hey, loan me some of Michael's money. And they would do that without even telling me. Now, this is not just the story. This is actually what happens. Now, we like to ask the question here as we go through this workshop, starting with personal banking. And then you'll see here we have part 2 on credit cards. Scroll on down. We're only going to talk about this for about a half a minute on home and auto insurance. So you always thought that you were getting your home and auto insurance from a home and auto insurance company, but you're actually getting it, and I'm not joking here, you're getting it from a fossil fuel insurance company that happens to sell home and auto insurance. And then lastly, we spent quite a bit of time in that 90-minute workshop talking about your retirement investments, your mutual funds, 401ks and the like. But back up here to the banks, So why do we use banks at all? Well, I think most of us use banks for 2 reasons. One is convenience, and the other one is security. Now, certainly there could not be any more convenient arrangement than me having a shoebox full of my money in my closet, but I don't get much security there. So I go down to the local bank and I say, I'm going to give you my money, make it convenient. They do. They give me a debit card and a checkbook and make it secure. And not only do they make it secure, but they even insure it for $250,000. But there's no other arrangement I have. I put my money into their bank unconditionally. And these banks, all of them then, have the ability to loan that money out to other entities that are looking for capital. So let's go back to Mr. Peabody. Certainly, Mr. Peabody has lots of money, but he doesn't want to tie up his working capital into the investment in a new coal mine, or if it was an oil company, a new oil rig or a pipeline or the like. So they go out for various reasons and they raise the money by getting loans from banks, or maybe they get some investments from investors, or maybe they get some grants from the state and federal government. And what happens from there is that we have very little say in how that money is going to be used. So on this webpage, and what we're going to look at right here is how do I end up getting out of this situation where my money is being used to cause harm? So let's just read here from the top. If you bank with Chase, Citi, Wells Fargo, Bank of America, or any of these other Wall Street banks, you can be certain that a portion of your money in the aggregate is being loaned out to businesses that are involved in the excavation, production, and transportation of fossil fuel products. The best way to get your information on this for a quick read is to go over here to Green America, Get a Better Bank, read all about it. And they talk about the big banks funding these fossil fuel projects, as well as we read here, sweatshops, factory farms, and other destructive industries. This middle column right here, it talks about how to move your money in case you need any tips on going from one bank to another. And then what we're going to spend our few moments on here, about 5 or 10 minutes, is looking at these tools on actually how you move your money. So simply put, I don't want to do business with Chase, Citi, or any of the Wall Street banks. What's the alternative? I use a regional or a local community bank or a credit union. So that's pretty simple. Just leave the big guy, go to the small guy. The small guy, for most part, they are not investing or funding any of those projects that we're talking about. Now, it's not necessarily that they share your values. They are actually just too small to be dirty. But what they do is they loan the money back into your community. So let's take a little bit of a look at this. There are three tools down here: Mighty Deposits, Bank Green, and Bank for Good. Let's click on the Mighty Deposits. There you go. So Mighty Deposits is a not-for-profit. It's a women's collaborative. All the data that is in here is non-proprietary. It's fed in by regulatory agencies at the state and federal level. The data is constantly being fed in and updated by their algorithms. So whatever you're looking at is going to be reliable and up to date. So tip here: find banks, find credit unions. If you're looking for a credit union, you have to be here. If you're looking for banks, you have to be here. You can read all about this here on your own when you go back and visit this website. Let's just see how powerful this tool is. Let's click on Find Banks. So here we have, I want a bank located in that is, so let's say getting ready to move to, where do you want to move to? Let's move to Muscle Shoals, Alabama. You type in Muscle Shoals, Alabama. That is anything. Now, we're going to leave it at anything for right now. The rest of these are what I refer to as the good guy buttons. So if you're looking around for a bank that was above average in small farm lending, you click that box. If you wanted women's own, you click that box and the like. But for our purposes right now, I'm just going to pick on one of the bad guy banks. And today, let's pick on Chase. You see here, you have a couple of choices. You want to go with the main bank, and you click on Go. And what you'll see right away here is what we call the bad guy button, top funder of fossil fuels. Now, if you don't see this button here, it doesn't mean that they're a fossil fuel free bank. It just is that they're not a top funder. For example, we could put in here Key Bank. And Key Bank is a large regional bank that's in Washington State, Ohio State, quite a bit of the Northeast. They are, for the most purposes, not funding fossil fuel projects, but they did team up with M&T Bank a few years ago and funded a frack gas pipeline out by Buffalo, New York. So anyway, if you don't see this button, does not mean that they're not fossil free or that they are fossil free, but it just indicates that whether or not they're a top funder. So what we want to look at here is, by definition, what a Wall Street bank is versus a community bank. So imagine that a Wall Street bank exists for the purposes of providing very complex banking services to Wall Street corporations. A community bank does not have the capacity to meet those financial needs. So right here, you'll see that $19 of the $100 that's in deposit is going back into the community in the forms of home loans, small business loans, construction loans, and the like. This is below industry average. And the reason it is so low is that this is just not their business. Their business is loaning big bucks to big projects operated by big businesses. I'm just going to click on this, see more data, so you can get a little bit more of a sense on what these big Wall Street banks are doing. So you can see here on what we would call the good guy buttons, they're below industry average all the way down the line. The bulk of their money is being used for funding big projects. So let's get out of here and go back and look at another bank. Now, Giselle, somebody could come off Moot and tell me a name of a bank that they're using in Colorado.
U.S. Bank.
Well, we're going to go ahead and put that in, but that's happens to be a Wall Street bank. Now, you're not going to see here the fossil fuel. They're not a major Wall Street, actually a major funder of fossil fuels, but they do have substantial funding of fossil fuel projects. Also, you'll see that there's 48 of the $100 would go back into the community. They do seem to be a little bit above average in housing lending and the like. I want to see what other U.S. bank associations we had there. I want to just give me a second. I'm almost certain that the one we want to be looking at is this one, but just let me do a check again. Yeah, that's the right one. Somebody want to give me another bank?
We have 3 in the chat that people have put in. So the first one is Native American Bank.
Okay, this is looking more normal. Let's look at what we're trying to do here with our money. As I said, that when you go to a bank and give them their money, you can't tell them, I want you to only loan my money to small businesses, or I want you to only loan my money to small farms. I don't want any of my money going into a strip mall, or certainly not into a box store. You don't have the ability to do that. Now, if we were to have a full workshop when we get down to the retirement investments, there you have a very specific contract where you tell your financial advisor or asset manager exactly where to put your money, into what mutual fund, into what exchange traded fund. But now back to the banks, you don't have that ability. So how do I get it so that my money is not being used to do harm? I at least want it to get to where it's doing no harm. And that's pretty easy to do. Just leave the big bad banks and go to the smaller good banks, right? I've gone from harm to no harm. But how do I know if it's doing good? Well, here's where you have to do your research on mighty deposits or the other ones. So that's why I call these the good guy buttons. 65 out of every $100 is going to go back into my community. Eat local, shop local, bank local. Why? Because when they make their loans, it's going to go to local. Now, also, I can find out a little bit more about what they're doing with my money here by the good guy buttons, and click on that. And you'll see here that, hello, here we go. They are way above average on large business. They're way above average on small business. They're a little low on these other things. So obviously they're out there trying to loan money to small entrepreneurs in the community. Now, 65%, you say, well, that seems a little bit low. Why is it not higher? We like to see this number somewhere between 60 and 80%. It should not be more than 80% because they do need to hold back some of this remaining amount into securities. Everybody remembers this movie, It's a Wonderful Life, where they loan out all the money and there's a run on the bank. You need to hold back some of the money to be responsible. All right, we need to kind of move along, but somebody got one more bank for us to take a look at?
So we did have a question in the chat that I think is important. So someone said they bank with Elevation's credit union, but it's a credit union, not a bank. Is there a significant difference between a credit union and a bank for our discussion purposes?
The most significant difference between a credit union and a bank is a credit union is owned by its depositors. So if I were to make a recommendation, I would always recommend go with a credit union. Now, it's an added value. This workshop is about being fossil free, but sometimes we have added values like, as I said, eat local, shop local, bank local. Why? Because I want to have that money reinvested in my community. So for me, I go to the smallest community bank or the most local credit union that I can find, and that's where my money goes. Rivers and Mountains has its deposit in a credit union. I have my money in a local community bank. And the reason for that is I don't have a credit union that's conveniently located to me. Otherwise, I would be in a credit union. So again, a credit union, the depositors own the bank. So here's another extra added value. Democracy in finance. You own the bank. And I think if we took some time, or you can, and go here, I'm over on the credit unions right now, and you typed in, there's Clean Energy Credit Union that's in Colorado. They are not a brick and mortar credit union, but all of their funding is going into clean energy projects for solar panels and the like. Again, this is not a brick and mortar bank, but is also one that is very highly recommended. Let me go and talk about credit cards, and then we can jump back on the banks or wherever your questions take you. But I hope you can appreciate the value of going to this Mighty Deposits website and doing some research on what's going on with your banks. So scrolling down here to credit cards, and of course, part of the 3/21/23 day of action is for us to cut up our credit cards. But one thing then comes to, well, then what am I going to do? Where do I get a so-called green credit card? And you'll see here that I've added the word truly green credit card. So if you have a card that is issued by one of these Wall Street banks, then they are going to be taking the money that they make from the card and using it as they do. And as they do is to invest in fossil fuel projects. Now, a big difference between banks and credit cards. With a bank, or a credit union, that's a deposit that is my money that is put in their care that they then loan out. It stays my money. With a credit card, it's no longer, quote, my money. I've either bought something or I'm paying a fee, and it's now their money. So with banks, they loan my money. With credit cards, they invest their money that they made off of me. That's the difference. Now, where do they make their money? There's three pools. The one pool is the annual user fee, which can be $60 to $100 and some dollars, depending. Many cards these days do not have a user fee. Some of them still do. But imagine if I have 1 million cardholders that are paying a $60 annual fee, I'm making $60 million just off the annual fee. That's my money now. I can invest it how I want. And how do I do it? I invest in fossil fuel projects. So, gosh, I don't want to have one of those cards because I don't want them taking my $60 and then going and doing that. I don't want to have anything to do with their business. The second way they take and use your money is off the fees that they charge for interest, or what we like to call user fees. And as you know, they're 13, 14, 18%. Now, hopefully most of us do not have any credit card debt, but as you know, millions of Americans do. And worldwide, it is billions that have credit card debt. And that adds up to literally trillions of dollars per year that they're making that they then can go use as they do. But what we want to talk about for those of us that don't pay an annual fee and don't have credit card debt is what we call the transaction fee. And you're probably aware of this, that every time that you use your credit card to buy something, let's say you're buying something for $100, that vendor is only going to get $97. $3 is going to go back to the bank that issued the credit card. Now, I use the word 3%, $3. Sometimes it's 1%, sometimes it's 5%, but let's use 3% for the purposes of the discussion. So what happens with that is that the bank that issued the card is going to get 3%, and they usually give something like 1.5%, or even 2% back to me, either in rewards or cash back. The other 1.5% goes to the bank that issued the card. Now, I want to change the conversation a little bit to where we talk about the bank that brands the card and the bank that issues the card. So if you had a Bank of America card that has their logo and image on the front, that, of course, is being branded by Bank of America, and it's also being issued by Bank of America. But you may have a card that is actually, let's scroll down here, that is issued by working assets. That's a not-for-profit. See? Now that's branded by Working Assets, but it's issued by Bank of America. Here's another affinity card, our friends at Green America. It's branded by Green America, but it's issued by TCM. TCM is not a brick and mortar bank like Citi or Chase. It is a bank that exists solely for the purposes of issuing cards for other banks or not-for-profits like Green America. So I've been using two terms here, branded, issued. So here I'm going to look at a green card, and it's called an evergreen card. It's appropriate because actually it's issued by First National Bank of Omaha, which is a fossil-free bank. So you have a bank that is branding its own card and issuing its own card. Same thing happens with Beneficial State Bank on the West Coast. It brands the credit card and issues it. I'm going to come down here to Amalgamated Bank. Amalgamated Bank is a bank that is, it's a B Corp bank that was founded by labor unions in New York City many, many years ago. It is highly rated by Green America and B Corporation, but they don't issue their own card. They never wanted to get into the business. So they brand their card and it's issued by First National Bank of Omaha. So in this particular case, and oh, by the way, I happen to have that card. No, I just clicked on it. I didn't mean to. I happen to have this card. And so every time I use it, there's 3% in play. Amalgamated Bank gets 0.5% for branding the card. I get 1.5% cash back, and the other 1% goes to First National Bank of Omaha. Now, I can carry on a little bit more about how this all works, but I want to just kind of move over to the store cards and other things. But I want to say this. We're concerned about 1%. If there's no annual fee and I'm not carrying a debt, why am I going to put so much attention in all the things that have to be done to stop funding climate destruction on 1% transaction fee? Now it comes down to someone like myself. I put most of my expenses through my credit card. So it's $2,000 or $3,000 a month. So, okay, it's $24,000 a year. 1% of that, it's just not a lot of money. But imagine this, 1% of a little is a little. 1% of a lot is a lot. And if there are 100 million of us that are putting through $2,000 every month on a credit card, 1% of a lot is a lot. And that money is now being used in such a way that may not align with our values. So again, what can I do about it? With the bank, I went and found myself a small community bank or credit union. Nice. With a credit card, I have to stay away from the credit cards that are issued by the Wall Street banks. I need to find a credit card that is issued by TCM, First National Bank of Omaha, Beneficial State Bank, or if it's a credit union, it would be CUNA. CUNA is just like TCM. It exists for the purposes of issuing credit cards for credit unions. Now, some small regional banks and many credit unions do brand and issue their own cards. So they're like Evergreen, they're like Beneficial. First National Bank of Omaha and Beneficial are a little bit unique because they also issue cards for other banks. So for example, if you had Key Bank, I mentioned them earlier, they brand and issue their own card. They do not issue any cards for any other bank. I just want to touch down here quickly before we get out of here on store cards, that there are store cards that are issued by the Synchrony and Community. These are just like TCM up here. They are not brick and mortar banks. They only exist for the sole purposes of issuing store cards. So if you had a Sam's Club or a Verizon card that was issued by Community, that would be a green card. So, Giselle, I know we're running out of time here. I think we probably should go over to questions and then we could come back to the chart here if we need to.
So we do have some time left. So if there's anything you want to cover on retirement savings or insurance, and just briefly going over that, and then we can do a Q&A session because it looks like there's a lot of engagement in the chat. So we want to make sure that people, get their questions answered.
Okay, you manage our time here, and when you say it's time for me to stop talking, you just jump in there, okay?
Okay, sounds good.
So hopefully we've given you a good idea here on how you can take your money and get it away from this unconditional deposit that you make into a bank that is very likely going to be making loans in your community. And we've also shown you that if you have one of these credit cards that are issued by a Wall Street bank, that what you need to do there is go find yourself a credit card that's being issued by your local bank or issued by your local credit union. Then you're going to be okay, all right? Or you're going to find it where it's issued by one of these green institutions. Now, the way that you find out about this is that you quite often have to turn the card over. So if you took this amalgamated card and you turned it over, it would say on the back, issued by First National Bank of Omaha. If you took this Green America card and turned it over, it would say that it's issued by TCM. If you were supporting Sierra Club and you turned it over, it would say that it's issued by Beneficial State Bank. Same thing would happen with your store card. If you had an Amazon card and you turned it over and it said Citi, which they do have, then that would be back up here to a Wall Street bank. But if you turned it over and it said Community, which they do have, then you would be fossil free. I want to take a moment here, though, since I have it, to say I didn't mention anything about American Express or Diners or Discover. All of them are not funding fossil fuel projects. You could call them fossil-free cards. American Express, that's not their business model. They make all their money, and they make a lot of it, by being a bank that's moving money around. It's all based on user fees. Their annual fee is rather steep. And they charge more than 3% to the vendor. They usually charge up to 5%. That's why you'll often go into a store and they say, we don't take American Express because American Express takes too much of the bite. There may be other reasons, some other values that you have for not doing business with American Express, but fossil fuel would not be one of them. So yes, let's talk a moment about home and auto insurance. Here again, we unwittingly think that we are getting our home and auto insurance from a home and auto insurance company. Now, I mentioned earlier in the workshop that Wall Street banks exist for the purposes of providing financial services for major Wall Street businesses. And quite candidly, those same businesses, if they tried to use a First National Bank of Omaha or a Beneficial Bank, or in my case, the Bank of Greene County here in the Hudson Valley, they would not be able to meet their financial needs. So with the home and auto insurance and these companies of Liberty Mutual, Travelers, Allstate, Geico, and the like, these are insurance companies. And what can you say? What do insurance companies do? They insure things. And they really like to insure big things because big things come with big premiums. Now, imagine the risk. When an oil company wants to build a new refinery, or the tar sands up in Alberta, they want to put in a new pipeline. When they go to their financial services looking for loans or investors or even government grants, all of them will say, you don't get a penny unless you have this project insured. No insurance, no loan, no investment, no grant. So they have to have insurance. And you can figure that the high risk is going to also be high premiums. And if the actuaries do their job right, high profits. The risk, think BP oil platform, Exxon Valdez tanker, Peruvian gas pipeline, oil pipeline rupture. When things go bad in the fossil fuel industry, it goes bad in a big way. Most recently in Kansas with the leak in the pipeline. So These insurance companies are out there doing what they do, insuring things, and they're seeking additional revenues, sources of their funds to underwrite their risk. So in every state that I know of now, for you to have a car, you have to have at least liability insurance. If you have a car of any value, you need to have collision insurance, particularly if you have a loan. If you have a house, you can't get a mortgage without insurance. And even if you paid off your mortgage, well, you probably should have insurance against fire and other type of damages, right? So here we have millions of people in the United States who have to have insurance. And these insurance companies rely on all that money. That's why every night, if you turn on TV, you will surely see an insurance company advertisement, and you'll see the lizard from Geico. You'll see Flo from Progressive. You'll see that stupid Inu from Liberty Mutual. Or you'll see the guy trying to be a simple country bumpkin from Farmers. But these are all major insurance companies. If you notice something about those ads, they don't say anything about their product. I mean, they'll say like 15 minutes or less, or they'll have some other story about it. But they really don't say anything about their product. All they're doing is selling their brand, their name, their image. They're selling entertainment because they want you to pick them so that they can have your premiums and my premiums and the person sitting next to you's premium to build up their portfolio for underwriting risk. So here again, what can I do? How do I get out of Liberty Mutual, Travelers, Allstate, Geico? Is it as simple as I leave the big bank and go to the small bank? And the answer is that's exactly what you do. Now, most of us have to go to get away from these folks. We need to go to a regional or a local insurance company. And just like a credit union is owned by a depositors, these mutuals, I've listed 4 here in New York State, but it'll be the same story in Colorado. You have a mutual, a cooperative, and a mutual. Cooperative, just think like a food cooperative. All of these are owned by the people that have the premiums. So it works like a credit union. None of them are insuring or investing in fossil fuels. So how do you get to these folks? In most cases, you have to go through an independent insurance agent. So instead of getting it through Geico, where you just pick up the telephone, or you can do the same thing with Progressive. State Farm, you have to go to an agent. Farmers, you usually have to go to an agent. But here you would go to an agent and you'd say, I don't want any of these big nationwide, international insurance companies. I want you to quote me some of these smaller ones. Now, when we have more time in our workshops, we do talk quite a bit about reliability and the ability to pay your claims. Most of your insurance agents, these independent insurance agents, will not give you a company that is not proven. I want to just direct you to a few other sources here, since we're limited on time. This read all about it over here from the Rainforest Action Network is very much worth the read, so you can understand more about how the insuring and even more so the investing goes. Let me just talk on that for a half a second. The insuring part, you understand. Insurance companies insure things. But the investing part, wait a minute. What do you mean they're investing? Liberty Mutual, if it were a bank investing in fossil fuel projects, it would be ranked number 4 or 5. It's investing that much. And what comes down to it is that they have all this premium money sitting around. And unlike a bank, the deposits in a bank that are sitting around are yours. With Liberty Mutual, the premiums that you've paid, it's theirs. So they don't loan out those premiums, they invest those premiums. And they're out there actually investing in fossil fuel projects. Now, one of the reasons they're investing in fossil fuel projects is because they're also insuring those fossil fuel projects. So it's kind of a loop for them. They end up insuring their own investments. Interesting arrangement, huh? It's all legal. So just to give you a quick example, I had insurance with Travelers. Other member of my family had insurance with Allstate. We both found, as we went to these other companies here, these mutuals down here, that we found savings on exact same coverage. And I mean exact same coverage, dollar for dollar. We found savings of around 28% in our premiums, literally cutting off about $1,200 a year in our premiums. Now, to scroll down in the workshop, which we don't have a whole lot of time on the retirement investments, this is a much different situation where to the banks that I mentioned earlier, and that this is your money that you are investing in companies, and it's being done under contract. So even if you have a IRA or a mutual fund or anything like that, you have a contract with your financial advisor and your asset manager that your money is going to go into that fund, this fund, and the other fund. But most of us don't have any real idea what those funds are and what they're doing. So across the spectrum here, read all about it. Stop the Money Pipeline has an excellent frequently asked questions section here. Green America, as always, wonderful place to go get information. But what we do in our workshops that are longer, and we spend a good 40 minutes often on this, is we go to this tool that's being put together by As You Sow called Fossil Free Funds. And this works just like the Mighty Deposits, where you can look up, instead of banks, you're going to look up an actual fund name, a ticker, or a manager. Now, these are not for stocks. These are for mutuals, mutual funds, and exchange traded funds.
And we are at time. So yeah, trying to figure out how to proceed. I guess, Michael, I'm not sure what your time is looking like, if we wanted to take 1 to 2 questions, or if we want to just have people email me their questions and I can forward them to you. What would be best?
All of that, yes. I've been busy trying to answer questions in the chat while you were going through that. So
awesome, thank you.
I can certainly linger for as long as people would like. And certainly send me questions. I take questions all the time.
Awesome. So yeah, if anyone has any like super pressing questions, like they really just, you're amped to move your funds and you just like have, you know, an urgent question, maybe we'll take 1 to 2 questions. Thank you so much. And yeah, I really appreciate you taking the extra time, Michael. And I will drop the slide deck in the chat right now.
I know one of the questions came up in the chat that we often get from the West Coast, California, Colorado, and the like, where there have been so many fires, is do these smaller insurance companies actually have the depth and the security in case of a major disaster that leads to just unbelievable number of claims? And all of the established ones that your broker will send you to, again, don't go out there and do this yourself. Make certain that you do your research. They've been around a long time. They've weathered a lot of different crises, and they have what's called reinsurance and stop loss insurance. Now, just a bit of caution, quite often that reinsurance is coming from the big European banks, Allianz, Lloyd's, and the like. And those companies do insure and invest in fossil fuels. So you won't be, let's say, completely green. But we use the metaphor ever so often that sometimes you just have to, when you're all out of clean shirts, what do? You take the cleanest shirt and hamper.
It doesn't look like we have any other pressing questions, and I do want to be mindful of everyone's time. So with that, I think we will conclude. Thank you so much, Michael. This has been a really awesome presentation, and just so grateful for your time and just helping to educate us. I learned a lot, and I'm sure everyone else did. as well. So hopefully you will all take action and move your funds this month. And if you enter to win, you might win a $100 gift card as a result of moving your funds. So I hope to see you all at future defunding climate disaster meetings. I hope to see you all at our March 21st Day of Action. And feel free to reach out to me if you have any other questions, and you will be receiving an email from me with the recording and all of the resources that are shared in addition to the action alerts that I shared. So with that, I will conclude our meeting. Thank you, everyone. Have a beautiful rest of your evening, and I will see you later.